Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR professionals. Today I'll be joined by David Urban. David Urban is a regular contributor here to InvestorToday.ca. Most of you know him as a true contrarian in most senses of the word. He has many years in the financial services industry working with fund managers, but he's taken time away from that now to focus more on his analysis. David and I will be discussing the 2012 first quarter and also discussing political influences that may affect markets globally. There are a number of elections coming up this year, not the least of which is the U.S. election, but elections in France as well as in Spain. So welcome to the show, David.
Oh, thank you, David, for having me. How are you doing?
I'm doing great. The markets obviously are in really rough shape right now. As you know, I do a lot of work with the juniors, specifically venture exploration. And so far this year, we have just been living in the toilet.
Yeah, it's been a difficult year for the junior sector and across the board in precious metals. You know, it's not an easy time to be there, but I think by the end of this year, investors will start smiling again. The best time to invest is when people tend to forget about stocks, not to follow the trend, but to look in the other direction.
Right.
And I believe we've reached that point right now.
Well, you're probably right on that one. I mean, a number of companies have seen major losses. I mean, even some of the bigger players have seen serious devaluation. Can we talk a little bit about what you think that is a result of? Is there just an overall lack of faith right now? Are we talking about fear keeping people away from these junior markets?
I think it's a bit of fear and a bit of the fact that some of the large juniors out there, namely a Barrick, Gold Corp, and Yamana Gold, are finding assets in the ground for just ridiculous numbers. If I think back here, I believe Gold Corp and Yamana both more than replaced reserves in the past year at between 10 to 15 cents per ounce. So when you're able to find that much, when you're able to replace gold at that price, it makes it difficult to go out and buy a junior or to present the rationale for going out to buying a junior. But, however, we have seen some M&A activity begin to pick up. I mean, we saw Silvermix get bought out by First Majestic. We're also seeing Iron Gold poking around the junior space, looking for an acquisition in the $400 to $500 million range.
Right.
So there are companies out there looking. It's just going to be a little bit of patience.
Do you think the financial markets, the money markets, are having a real adverse effect on whether or not people get into any of these markets right now?
Oh, I believe so. I believe that, we're seeing a lot of tension in the markets right now. And we've started to see the major indices begin to roll over. If you look at the technical charts, you see that we are in a clear sort of a rounding top formation where, stocks have kind of made a quick double top, and they've been pulling back. And first quarter earnings reports have not been that strong, despite what you may be hearing. Mm. They're coming in ahead of the game, but they're coming in ahead of very tempered expectations. So, although you may say that it's good that they're coming in ahead, after you've kind of laid the bar on the ground, it's kind of easy to step over it. So, it's not a pretty quarter out there. We've got problems emanating from Europe. We still have worries about a China slowdown. Mm-hmm. And there's a lot on investors' minds right now.
Well, and there's a number of elections coming up this year as well. I mentioned France at the beginning when I did the intro, as well as Spain, I believe, and, of course, the United States, right?
Yes, that's correct. And it appears as though the socialist candidate, Hollande, is going to win the election in France, although he won't win it outright, will win it after the runoff election. Mm-hmm. His polling has consistently been between 53 and 60%, so it's safe to say that he's got a comfortable lead on the current President Sarkozy. So we're looking at a real change in power in France, and although he's running as head of the Socialist Party, you should know that Socialist Party in France is not really a communist party. So you don't have to get worried or upset about that. He's more of a technocrat than he is a socialist. Mm-hmm. I've spoken with a couple of French friends, and they've said that really there's not much of a difference between either candidate. All that you're hearing in the press right now about taxes and spending is just rhetoric, and that's typical for an election cycle. I mean, you hear the candidates tend to promise everything to the base in the first round of elections and then move towards the center in the second round.
Right. Well, to be honest with you, I've watched politically both in Canada, the United States, and also around the world, and there really doesn't seem to be a lot of difference between any of the candidates running from any of the parties. Do you think it's fair to say that the electors are trying to put the blame for this financial crisis on their elected officials? And is that a fair assessment, David? Or is it really their fault?
I think so. I mean, we've really seen in the last 3 to 4 years, it's been a difficult time in the United States. The parties have become so diametrically opposed to one another that any sort of rational legislation has zero chance of being passed in the United States.
Right.
And we're beginning to see that overseas as well. The candidates that are up for election, they're not very palatable to the electorate. If you go and you ask people in the United States, are they happy with the candidates that are running, I think a majority are telling people, no, we're not happy with either candidate that's running for election.
Mm-hmm. Well, I mean, President Obama came in with a huge unemployment numbers. I mean, probably the worst we've seen since the Great Depression. But we've seen those numbers turn around, and there have been a great number of jobs created under this current administration. The thing that always surprises me, though, is you have a Democratic president in the House, and the Democratic Congress and the Democratic Senate isn't willing to support their Democratic president. And, it just seems a little off-putting to me that you would have one party or another party, and yet neither party is willing to support their particular leader.
No, that's correct. And, and that even stretches back to 2000 with George Bush and the Republican Party.
Right.
I mean, he swept into power, and he had a Republican Congress for, I believe it was the first 6 years,
mm-hmm.
and really very little legislation, tangible legislation, got done. And it's just strange in the United States. We've really become sort of I don't even know how to describe it, but it really seems as though the political process in the United States is broken.
Well, is there a fix on the horizon? Because, of course, you're going to need that fix in order to move the economy forward, aren't you? If the economy doesn't start to move forward, people are going to continue to blame their elected officials, and the reality of the situation is it really their fault? I mean, I realize that during the 90s under Mr. Clinton, they took the brakes off the financial markets, and they allowed these guys to just take off without any concern, and now we've seen the chickens have come home to roost, to use that euphemism. Are we now starting to lay eggs here? Are we going to start being able to take some of this to market?
I think what we're going to see, and it's a difficult call, and I touch on this in my first quarter report, is that if Romney wins, you're likely to see in 2 years a lot of anti-Republican rhetoric come out, leading to Democrats adding to their seats in Congress and possibly taking back the House. Probably not the Senate, but typically when a party comes into power, the first midterm election, they see small to moderate losses, and we saw that this year with, in 2010, the Tea Party movement against Obama,
right,
and President Obama, and if President Obama wins a second term, and I think that's probably the best case right now if you want to see change, because what will happen is you won't see that much work being done. You probably will still see the continued stalemating in Congress, but what that will lead to is major wins for the Republicans in 2014, just as we saw in 2006 when the Democrats swept into power in Congress.
Mm-hmm.
And it's just an odd historical metric that the party in power in the White House sees major losses during the midterm election, during the candidate's second term. So if you're looking for change, I think you're going to want to, sort of in an odd way, you're going to want to support Obama, because things will begin to break down a little bit more, and we'll see real legislative change in 2014, and that'll end up leading to some sort of Republican. We'll probably see a Republican run for the White House and win in 2016.
Right.
But I'm not. I don't see the change that I'm thinking that people are looking for with either candidate. And I think that's what a lot of people are saying, or at least the people that I'm talking to in the United States, is that they are really disenfranchised. They feel left out of the political process.
Right. Well, I'm gonna, we're just about ready to wrap it up here. I'm gonna give you the last little bit there. I want you to, if you can, just outline to us what you saw in quarter one. Where do you see the balance of this year? Are we going to see positive movement here, David?
Well, I think for the first quarter, what we saw was the markets got ahead of themselves. There was a little bit of, to coin the term from Greenspan, rational exuberance, where we saw a lot of banking stocks run up by 50 to 100%. In a lot of cases, the banking stocks that ran up were not that good. And that's one of the signs of a topping market, is when lower quality issues or lower quality stocks begin to rise. And I think we saw that in the first quarter.
Right.
We're pulling back in the second quarter. And I think a pullback to the 200-day moving average is certainly not out of the realm of possibility. And in fact, that would be welcome. I think for the rest of the year, we will end up positive, but it's going to end up being very close to 2011, where we had that great first quarter, we had a rough second quarter, rough third quarter, and then in the end pulled out a positive year. I think we'll be tracking very similar to that for 2012.
Well, you heard it here first, listeners. It's David Urban, the True Contrarian. You want to put out your website there, David, so folks can go to your website if they want to check out some more information from you?
Sure. My website is www.atruecontrarian.com.
And I'm Dave Glover, your host here at InvestorToday.ca. I want to thank you for tuning in, listeners. I want to again thank David Urban for being a regular contributor. We may see David at the Chicago Resource Expo. That's still up in the air, but we are looking forward to running into David at the New York show. So, David, we look forward to seeing you there, and thanks for being on the show today.
Thank you once again, David. It's always a pleasure talking with you.
Bye-bye now.
All right, bye.